name is Greg, and I'm here to talk to you about budgeting. A budget is a necessary tool for successful finances. It's basically a money plan that helps you understand where your money is coming from and where your money is going. By understanding how you spend your money and by keeping track of your expenditures, you can easily avoid a bad financial situation. The first thing I want you to do is to download a couple of forms that we've provided for your convenience. To download these forms, go back to the internet page where you downloaded this video and click on the respective icon for each form. Once you've downloaded the forms, print them. I'll tell you when you need to use these forms in order to complete our budgeting exercise. To construct a budget, first you need to find out what your net income is. Your net income is the usable income you have on a monthly basis. It doesn't make any sense putting a budget together using your gross income amount. Your gross income is the money that's on your paycheck. It's the gross money that you make before any deductions such as federal withholdings, Social Security, state income tax, or any other deductions from your paycheck. For your budget, you need to use the amount of money that is actually available to you on a monthly basis, and that is your net income. Take a look at your paycheck and find the amount of money that you get to take home every pay period. Multiply this number by the number of pay periods in a year. For example, if you get paid every week, you will multiply by 52 because there are 52 weeks in 1 year. If you get paid every 2 weeks, you will multiply by 26. Now, divide the results by 12, as there are 12 months in a year. That will give you your net monthly income for your wages. Go ahead and write this number down in the space for employment wages in your personal budget form. Any other disposable income that you have, such as alimony or child support, must be added to your net income. It's important that you only add money that is guaranteed income. If you are getting overtime 1 month, but you don't expect it in upcoming months, it shouldn't be added to your net income when you are designing your budget. Write down these numbers in the respective spaces on your personal budget form. Add all of these numbers to your net monthly income, and by adding these figures, you will get your total net monthly income. Write the number down in the space provided in the budget form. Now that you know your net income, the next thing you have to find out is what your expenses are. The easiest way to understand what your monthly expenses are is to go through your checkbook. Take a look at all the checks that you've written throughout the month for such things as rent, utilities, insurance, credit card bills, automobile expenses, etc. Write down the amount of these expenditures in the appropriate spot on your personal budget form. You also need to figure out your monthly expenses that you paid for in cash. To track these expenses, we recommend you use the daily expense tracker form that we have provided for you. Currently on the screen is a sample expense tracker form for you to review. This sample form looks similar to the one that you downloaded from our website. To get a revealing picture of how you are spending your money, write down the amount of any money you spent and note where you spent it for an entire week. For example, groceries $25, lunch $5, bus fare 50 cents. Make note of every dollar and cent you spend, even if you stop to buy a soda and some chips. Why? Say you spend $2 a day on soda and chips, that can add $15 a week, $60 a month, and $700 a year. After a week of tracking your expenses, split them up into categories based on the ones provided on the personal budget form. Write down the amount spent in each appropriate category. Finally, calculate how much you spend paying off your credit card debt, if you have any. If you are a client of EMCC or any other debt management program, you must budget in your monthly payment. Write this amount down in the space provided for credit card debt. You should also budget in some money for savings. Put any amount that you can into a savings account, even if it's not a large amount of money. If you put a set amount of money into a savings account every month, by the end of the year, you'll have a nice amount of money for your retirement, a college fund, or a medical emergency. If you have a direct deposit with your employer, have them deposit a set amount of money into a savings account every month. This way, you won't be tempted to spend it. If you have any additional expenses that are not categorized on the personal budget form that we provided, feel free to add them. Budgets are different for everyone. Make sure that you include all the expenditures categories that you need so that your budget will work for you. To balance your budget, add all your expenses and subtract them from your total net income. Let's pretend that your expenses added up to a total of $2,350. For this example, we'll say you have a net income of $2,800. When we subtract $2,350 from $2,800, we get a total of $450. This is the amount that is left over from your expenses that you can use at your discretion. So, what can you do with that money? Instead of simply spending it on things you don't really need, try putting some of this money into your savings account. There it can serve as a rainy day fund for future unexpected or large expenses such as house roof repair or tires for your car. You can also put this money into a retirement fund. It's never too early to start saving for your retirement. You may also want to put the extra money away for a future vacation or a large purchase. If when you balance your budget, you get a negative amount, it means that you are spending more money than you are bringing in. Review your expenses and see where you can cut down so that you are not spending more money than you have. Next, I'm going to show you a set of recommended monthly spending guidelines. These personal budget guidelines illustrate what percentage of your net income should be spent on each expenditure category. You can use these to find out if you are allocating too much money to a certain aspect of your budget. For example, when you look at housing costs, these should be no higher than 30% of your monthly take-home income. Monthly living expenses should be no more than 20% of your income. Transportation, 12%. Children, 10%. Savings and donations, 10%. Medical expenses, 8%. And school and work expenses, 5%. And finally, recreation should take up no more than 5% of your monthly take-home income. To convert your expenses into percentages, divide your expense total by your total income, then multiply by 100. In our example, we have total housing expenses of $1,000. We divided that number by our net income of $2,800 and multiplied by 100 to get 35%. That means we spend 35% of our monthly income in housing expenses. Use these numbers as guidelines. If you happen to spend a higher amount on housing, such as 33 or 35%, but spend only 14% on transportation, that's acceptable. What's not acceptable is when you start to look at your expenditures and your housing takes up 50% of your income, or you are spending way too much over the suggested guidelines. When you do that, you're making it very difficult for yourself to make ends meet on a monthly basis. Make sure you review your budget every month. Pay attention to how your expenses change and record those changes. Make the necessary changes to your budget so that your budget remains balanced every month and you are not spending more than you have. If you need more information, feel free to go to our website at www.dmcccorp.org and click on Educational Materials. There you'll find more information about successful budgeting and how it can work for you, as well as educational materials that may be helpful for you in the future. Thank you for your time.